Hello and welcome to this edition of Global Business on CGTN. I'm Lily Lu, and these are the headlines we're tracking at this hour. An AI roadmap, Chinese President Xi Jinping outlines 4 key proposals on AI development and governance in his speech to WAC in Shanghai. Stable market. China's foreign exchange market remains stable in the first half of the year despite increased turbulence in global financial markets. Gold gauge. World Gold Council CEO warns gold prices could rise further if central banks hike interest rates, adding to sovereign debt pressures. And as usual, let's get a quick check on Chinese mainland equity markets when we kick off the show, where we see key indices extended their losing streak at the end of the week. This is where key indices stands at final session of this week. The Shanghai Composite Index finished the day diving over 3%, down by about 120 points over there, and tech-focused China's index is nosedived more than 7%. We'll find out what happened there later on in the program. For now, here's a quick check on regional markets and overnight performance on Wall Street. Top story of the hour, Chinese President Xi Jinping has delivered a keynote speech at the opening ceremony of the 2026 World AI Conference and a high-level meeting on global AI governance in Shanghai. President Xi presented 4 observations on artificial intelligence development and governance. First, adhering to the principle of openness and win-win cooperation while boosting innovation-driven development. Second, strengthening risk awareness and ensuring AI is secure and controllable. Third, encouraging inclusiveness and mutual learning among civilizations. And fourth, advocating solidarity and improving global governance. President Xi also says over the next 5 years, China will provide developing countries with 5,000 opportunities in AI training. He says that China will develop international AI application cooperation centers with major multilateral organizations such as ASEAN, the League of Arab States, the African Union, the Community of Latin American and Caribbean States, the Shanghai Cooperation Organization, and the BRICS. China will help 30 countries utilize the AI-powered Mazu meteorological early warning system. The Chinese president also announced the establishment of the World Artificial Intelligence Cooperation Organization. And just ahead of Friday's opening of the 2026 World AI Conference, leaders of 29 countries attended a signing ceremony in Shanghai on Thursday to launch the World Artificial Intelligence Cooperation Organization. Founding member states include China, Kazakhstan, Laos, Pakistan, Russia, and Indonesia. The agreement states that the Intergovernmental International Organization aims to promote global governance in AI and ensure the orderly development of AI in a beneficial, safe, and fair direction. The organization, headquartered in Shanghai, will adhere to the purposes of the UN Charter and uphold the concept of extensive consultation, joint contribution, and shared benefits. And now for more insights on this year's WAC and the future of AI development, we're now joined by Zhou Mi, Senior Research Fellow at Chinese Academy of International Trade and Economic Cooperation. Thank you so much, Zhou Mi, for joining us on the program. So we just hear from Chinese President giving a speech at the WAC 2026, where he proposed more efforts will be paid from China's end to help the global building of AI development. So my question to you is, how will those moves help to reshape the landscape of global AI development and influence the formulation of international rules?
Well, I think that AI is in the phase of very quick development. So in this kind of phase, we have to understand that without enough cooperation, the AI cannot just developed as we wish. So this kind of cooperation are really important because all the related stakeholders are part of this AI world. So AI is not just existing in the digital world. They are really having more interference with our physical world. So we need to have a better understanding about that kind of issues. And I mean, all the related stakeholders, they have to do it together and trying to treat that seriously. So this cooperation are really helping us to have a better understanding about the potentials of the AI impacts and also considering about the rules. How can we deal with such a kind of uncertainties? By the cooperation would be the best way for us to deal with that, and we need to do more.
Now let's move on to the newly established WACO. How is this platform going to help China's AI strengths to be shared cross-border and also with the global economy?
To be honestly, I would say that China is one of the leading countries who are having not just the imagination about the AI, but also many kind of applications, and together with many leading companies. These leading companies are trying to share the world with their technology. So the open source systems or ecosystem is one of our priorities and advantages. I hope that in these kind of organizations, we can hope that we are trying to support the other countries to understand the AI in the proper way, and we are going to reduce some of the barriers to control the possible risks. And I think that the cooperation would not just beyond the abilities of the humans. We are trying to define some of the possibilities, coverage of the rules, and we are trying to have better schedules for the discussion in the coming years.
And also, the president's speech stressed the need for heightened risk awareness to ensure safe and controllable AI development. So what known and foreseeable risks does AI present, and what effective measures can be taken to guard against them?
Well, in my understanding, there may be two kinds of risks. The first one is that is too less, because the AI technology are not so widely used in our daily life. So I hope that many countries are realizing that kind of technology of AI is very important to improve the productivities of their manufacturing. So they are trying to have a better abilities to be involved in that procedure. So we need to address this risk of not able to use AI means that we are maybe not able to compete with other partners. And the second kind of risk maybe that is too much. If AI cannot be controlled, if they are just developed at its own speed, I would say that it may be out of control of ours. So we need to do very carefully and together with the companies, together with the society and also the communities to define the possible risks and trying to discuss how can we deal with these problems. We can share our abilities with other countries. But I also believe that they also need to act together with us.
Okay, well, thank you so much, Tommy. Please stay with us for more discussions. Shifting gears to Ethiopia, where experts are turning to artificial intelligence to tackle cybersecurity challenges. While much of Africa is embracing digital transformation, concerns are mounting now that protection measures are not keeping pace. A hub in Addis Ababa is now equipping local talent with advanced skills to help close that gap. CGTN's Caroline B. has more.
Across Africa, technology is reshaping daily life, work and how people do business. But as the continent becomes more connected, cyber threats are also becoming more advanced. Yet, experts say the region lacks talent needed to protect its digital infrastructure.
Once you have the technology in your hands, you need to operate it, secure it, maintain it, and scale it out throughout the country, throughout the continent. So for this to happen, you need to have a resilient cyber workforce behind the scene. And the issue that is really prominent right now is we don't really have high number of qualified professionals as per the global standard.
In Ethiopia's capital, Addis Ababa, a growing cybersecurity community has been stepping up to tackle escalating digital threats. Founded in 2022, Yekolo Temari brings together people to provide practical mentorship and training built around AI-driven defense.
We founded this cybersecurity community because we recognized that cybersecurity was not being given the attention it deserved. Our mission has always been to help close that gap by raising awareness and equipping young people with the technical skills needed to build a safer digital future.
And for many, This hands-on experience is something a traditional classroom does not offer.
Through
Ekolo Tamari, I was able to access hands-on labs, training sessions, and cybersecurity competitions. Those experiences helped me apply what I learned in the classroom, improve my technical skills, and build the confidence to prepare for a career in cybersecurity.
As such hubs continue to strengthen Africa's cyber workforce, experts say the continent should also ensure that AI reflects its own needs, languages, and realities.
The way we use AI, the way we incorporate AI into our day-to-day life should be governed. We are using the AI as it is. AI requires a data to learn and to educate itself. So those existing AI models that we have been using, the ChatGPT, the Gemini, or etc., those are westernized AI models which were taught with the westernized data content. So Africa requires its own AI model which learns over African data.
As a strong digital network needs both advanced systems and skilled experts to protect them, this Ethiopian hub continues to build the talent needed to secure Africa's digital future. Caroline B., CGTN.
And for more from the Shanghai World Artificial Intelligence Conference, our reporter Wang Tianyu went down to the exhibition floor to see it firsthand. And this is what he brings to us.
This is one of the busiest booths at WAIC this year. 4 robot arms plus 2 humanoids building the Great Wall together.
This is a demonstration of cooperating robots. Well, for manufacturing, this is a standard model of pipelining. That is, some robot do one thing and the other robot do other thing, and they cooperate.
Look at the brick. It's just the size of a Lego brick.
Precision is the core part. So in assembly, we have to put the bricks at millimeter or even sub-millimeter precision in order for the bricks to lock into each other. So that requires a great deal of precision, reliability, and intelligence to make the alignment work.
This year's WAIC is basically about 2 things, the humanoids and AI agents. And these 2 are all based on the capabilities of the computing power, which is behind these little black boxes.
The key innovation is our completely cable-free design. It's more reliable and simpler to maintain. Plus, it cuts down data delay and signal loss.
Over 1,100 companies have gathered here in Shanghai at this 4-day event, and they come here to exhibit more than 3,000 cutting-edge products. And the message behind it is clear. This isn't about who has the biggest AI model. It's about which AI can actually get to work. Wang Tianyu, CGTN, Shanghai.
And in Shanghai's Zhangjiang Science City, technology, talent, capital, and market resources are brought together through a range of innovative policies and support measures. Our reporter Bi Ran visits that community to see how industrial clustering is accelerating the journey from AI ideas to commercial applications.
Artificial intelligence development depends not only on algorithms, data, and computing power, but also on how quickly companies can connect technology with talent, capital, and real-world demand. In Zhangjiang Science City in Shanghai's Pudong area, AI is becoming part of both the industrial landscape and daily life.
Here, the deep integration of large models and humanoid intelligence has created a very efficient industrial ecosystem. Partners can be matched within a day. Prototypes are produced within 3 days, while the trial production begins within a week.
In Zhangjiang's Robot Valley and AI Town, developers of foundation models can work alongside computing providers, data companies, robotic startups, and application developers. This proximity allows companies at different stages of the AI supply chain to find partners, test technologies, and respond more quickly to market demand.
We bring together robotics developers, manufacturers, businesses across industries and end users, many of them based in Zhangjiang, to build a diverse ecosystem for commercial applications.
Sharebo is a robot leasing platform. Its early commercial rollout offers a possible model for bringing AI technologies out of the laboratory and into real-world settings.
AI cannot advance through the efforts of one company alone.
Clusters help resource flow more efficiently. AI also relies heavily on real-world use cases. Only by deploying it in practical scenarios can a technology create greater value.
Zhangjiang already hosts more than 600 such AI companies and over 30,000 industry professionals. They are forming an industrial chain that stretches from basic infrastructure and core technologies to commercial applications. For tech companies, the cluster effect is crucial.
Our company is increasing R&D investment while making AI more accessible. Its open source models help companies develop applications without starting from scratch. SkillHub offers 78,000 reusable AI capabilities, with over 30 million downloads. Ready-to-use products by Tencent also help businesses and professionals adopt AI for coding, documents, and creative work.
To make that collaboration less costly, Shanghai has introduced a package of support measures. Office rent in designated spaces can be as low as 1 yuan per square meter per day, and young entrepreneurs can receive temporary free accommodation. Companies can also apply for computing, model, and corpus vouchers. Each type of voucher can provide subsidies of up to 1 million yuan, in some cases covering the full eligible cost.
Computing vouchers give companies with limited budgets access to computing resources in Western China. Model and data vouchers provide access to advanced model APIs and training datasets, complementing broader policy support and talent subsidies.
By 2027, the Science City aims to attract more than 500 additional AI companies, complete the registration of 100 large models, and cultivate 3 to 5 globally competitive enterprises. For Zhangjiang, it's all in the pursuit of shortening the distance between an artificial intelligence breakthrough and its use in the real world. Biran, CGTN, Shanghai.
China's embodied intelligence industry saw strong growth in the first 5 months of the year, and that's according to data from the State Taxation Administration. Revenue in the sector jumped 22.4% during the period, building a 13.9% year-on-year gain in 2025. Core component manufacturers posted a 6.8% revenue increase, while spending by industrial enterprises on embodied intelligent robots surged 2.3 times. That's a clear sign of deeper integration between the technology and industrial production. And revenue from supporting services also rose by 1.9 times year-on-year. Geographically, Guangdong dominates that sector, accounting for 78.7% of national sales revenue. And for more insights on AI development, especially the robotics sector, let's bring back Mr. Zhou Mi from the Chinese Academy of International Trade and Economic Cooperation. Mr. Zhou, thank you so much for staying with us. So how widely are humanoid robots being deployed in manufacturing sector today, and which industries are likely to see the most disruptive changes in the near term?
Well, in my understanding that the humanoid robots are not so widely used in the manufacturing right now, because compared with the humanoid shape, I think the traditional robots are well handling all these kind of related stakeholders. But if you are talking about the future, I would say that, many companies who are dealing with labor-intensive industries, maybe they were able to use humanoid robots to act like the people, and the humanoid robots can do a lot of things without the need to have the light, or they can work for so many times. So in the textiles, in some of these industries like the garment or even the shoes making, maybe in those factories in the future we are expecting to see more robots. And based on the cost, I would say that the use of the robots still need some time to prepare for the large scale of the usage and trying to control the cost to a preferable level.
And also, we just heard that Guangdong province accounts for close to 80% of national sales revenue in embodied intelligent products. So from a policy standpoint, how can authorities sustain Guangdong's innovation momentum while also helping central and western parts of the country to develop their own specialized niche?
Well, I think that Guangdong is leading the trend because that they really have a complete structure on the manufacturing about the parts of the robots, and also some parts very necessary or services necessary to supporting the robotics. I think that is not based only on the policies, that is based on the market intentions. And also, Guangdong is one of the most open areas in China, so they have a lot of interactions with outside world. So we are trying to have a better openness also in the middle and the western part of China. So based on that kind of logic, I would expect that we are able to deliver some of the messages to these areas and also trying to help them by the cooperation through the inter-regional cooperation from the east to the central and the west. I hope that we can do more in the future.
Mm-hmm. And also, in which consumer sectors are embodied robots likely to achieve the earliest market penetration and mass adoption?
Well, I mean, the consumers need some time to have some confidence in using the robots for the safety reasons, for other reasons. So I hope that maybe in the areas like for the housekeepings or in the kitchens, those areas are leading the usage of the robots in the houses. And maybe in the future, we are saying that the robots can be also used to taking care of the children and also the senior persons. So we need some time to have the better guarantees and also the confidence on using that with a higher standard and better safety.
Thank you so much. That's Mr. Zhou Mi, Senior Research Fellow at the Chinese Academy of International Trade and Economic Cooperation. And now we turn to South China's Shenzhen and the opening of a commercial humanoid fighting league. It's called the Ultimate Robot Knockout Legend. It was held on Thursday. Well, this event, billed as the first of its kind, attracted over 200 teams from countries including China, the US, Poland, and Singapore. 32 teams made the cut. Our reporter Xu Hua was at the scene to see what this showdown really means for China's robotics industry and where the real battle lies.
This is not fiction.
This is reality. A robot fighting league happening right now in Shenzhen, South China.
The Ultimate Robot Knockout Legend, or URKL, kicked off on Thursday. It claims to be the world's first commercial humanoid fighting league. These machines from Shenzhen-based firm Engine AI are not just built to take a hit and keep swinging.
This kind of competition upgrades everything: sensors, motion control, AI decision-making, neural networks, joint performance, laying the groundwork for home robots in the future.
But fighting isn't the only game in town. Remember the Robot Marathon in Beijing? It featured over 300 humanoids, including units made by domestic firms Tinggong Ultra and Unitree, and others from France, Germany, and Brazil. That was a test of endurance, thermal management, and battery life. Then there's another application: companion robots. With lifelike skin, subtle facial expressions, and a relationship-building model, another Shenzhen-based firm, UBTech, is betting on emotional AI.
Robots doing housework at home? That's 5 to 10 years away. But right now, we can use large model tech to make robots understand and interact with people better.
Yes, fancy demonstrations win a lot of applause. But how close are these robots to winning customers over?
What we have now is far from what people expect from a robot. Yet with more funding and smarter minds iterating every day, the gap will close. This is tech finance in action, where China is investing for the future.
So each path is testing a different part of the humanoid puzzle. The market may not just pick one winner, but the race to bring humanoids into the real world is officially on. Xu Hua, CGTN, Shenzhen.
This is Global Business on CGTN. Still to come on the program, stable market. China's foreign exchange market remains stable in the first half of the year, despite increased turbulence in global financial markets.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Time now to get a check how equities across the region are finishing the week, and for that we cross over to Wang Ying in Shanghai. Hi there, Yin. So WAC 2026 is now on in Shanghai in full swing, and that draws global attention today. So today's stock market was also driven by AI-related momentum. Walk us through how Chinese mainland shares are performing.
Well, yes, of course, Lily. Well, mainland markets today tumbled in today's trading session, actually, as chipmaker Changxin Memory Technologies IPO, also known as CXMT. That IPO might stir fears that a slew of upcoming domestic mega IPOs will sap liquidity in the market. The Shanghai Composite Index was down 3%, failing to stand on the 3,800-point level. The Shenzhen Component Index lost 5.4%, and China's large cap index, CSI 300 Index, was down 3.6% at the close, hitting a 3-month low. Investor caution can be seen in the subscriptions for newly issued shares of CXMT, and retail subscriptions exceeded the CXMT shares available by more than 200 times. But the oversubscription rate of Asia's biggest IPO so far this year was much lower than most Chinese IPOs. Meanwhile, shares of semiconductor and computing hardware sectors fell sharply. Photovoltaic, robot, commercial aerospace, and AI applications concepts were among the top losers today. The CSI AI index slumped 8%, and the Star Chip Index retreated 8.27%. But bucking the trend today, overseas cross-border oil and gas, green power and public utilities, banking and finance, and large-cap value sectors staged broad gains today, with overseas cross-border oil and gas stocks leading the market rally. Lily.
Well, tell us, what you are seeing today in Hong Kong and Tokyo markets.
Well, yes. Over in Hong Kong, shares also swooned, led by tech stocks. Stocks of storage concepts were among the top losers. Giga Device Semiconductor fell 12%, and Montage Technology lost 9%. And the decline of storage-related ETFs widened. Chip makers continue to drag stock indices lower as a brutal sell-off in chip makers rippled through global markets today, triggering a rout across Asia. Hong Kong-listed shares of chip maker SMIC tumbled nearly 11%, and Hua Hong Gray Semiconductor was trading nearly 13% lower. The Hang Seng Index lost 1.78% at the close. The Hang Seng Tech Index fell 4.37%. And meanwhile, AI-related stocks suffered heavy losses, leading losses on the market's tech stock index. Shares of CAI, better known as Triple AI, plunged more than 28%, its biggest percentage fall since its listing earlier this year. And Minimax Group dropped more than 15%. Hang Seng Artificial Intelligence Index was trading down 10.6% at the close. And over in Japan, the Nikkei 225 Index tumbled as well. That tumbled 4.4%, marking its steepest decline in 4 months. The decline followed overnight losses in U.S. equities, where technology stocks tumbled, while U.S. economic data showed strength and corporate earnings season was robust. With South Korea's market closed for a holiday, selling pressure intensified on Japan's tech market, and notably on chipmaker Kyokusha Holdings. Kyokusha lost 16% for its steepest one-day loss since November 2025. And Sunbo fell 15%, followed by Taiyu Yuden, down more than 12%. And also, geopolitical tensions remained elevated as an escalation in the Middle East conflict prompted investors to shun risk assets. But that's all from me in Shanghai. Now back to you, Lily, in Beijing.
Thank you so much, Wang Yi, for the market wrap. China's foreign exchange market held steady in the first half of the year, weathering increased turbulence in global financial markets. The yuan accounted for nearly 53% of cross-border payments, up 1.3 percentage points from last year. The country's foreign exchange regulator said that is a sign of growing vibrancy in cross-border trade and investment. In the meantime, trading volume in foreign exchange market posted solid growth. The onshore RMB market rose 5% year-on-year, beating the 2025 growth rate by 1.5 percentage points. On the reserves front, China's foreign exchange holdings continued their steady climb, increasing by $58.4 billion from the end of last year. And now let's get more insights and discussions on cross-border investment in China's foreign exchange market. For that, I want to bring in Jiang Gong, Professor of Economics at the University of International Business and Economics. Jiang, thank you so much for joining us on the program. So let's start with this. What do you think are the key characteristics of cross-border investment revenue and expenditure patterns reviewed at today's press briefing?
Well, first of all, thank you very much for having me. I think what the statistics are showing is that China is in a very good position in terms of its strategic foreign exchange reserves, in terms of the exchange rate, in terms of the capital inflow and outflow, in terms of trade situation, surplus or deficit. We enjoy very large, sizable trade surplus. All of these indicators are showing that we're in a fairly good position. And certainly this is driven mostly by Chinese products being very competitive on international markets. Our products are very much in demand worldwide. I think these are the underlying forces that are driving a very good, here we economists describe as in terms of trade situation right now.
And also, based on the latest foreign exchange balance data, what fundamental factors drove the RMB strength during this period?
Yeah, well, as I said, we have a foreign exchange reserve of $3.4 trillion. That's a lot of money. If you put this money as a GDP figure, probably we're talking about making into the world's top 10 economy. That's the kind of money we have on the side, and we can put this money in good use and get a decent return from it. And I think the fundamental reason, as I explained, is that we have a very strong economy. Corporate China is very competitive internationally. Their products are very much in demand everywhere. To the extent that some countries, for example, European Union, even thinking about imposing tariffs on Chinese products. So I think overall, we're in pretty good shape from an international economic perspective, and I think this is very much due to very rapid technological advancement, innovation drive here in China. I think Chinese companies, at the end of the day, we're just talking about a very competitive set of Chinese companies being winners all over the world.
Okay, and also the 15th Five-Year Plan prioritizes RMB internationalization. So based on foreign payment and revenue numbers, what additional benefits will this bring to global investors who are allocating RMB-denominated assets?
Yeah, well, I think one of the statistics shown today is the percentage of trade being settled in RMB. This is actually a quite astonishing number. It's now close to 60%. I remember it's like 56%. This is actually a very good number. That means that RMB is being used everywhere for trade settlement purposes. And RMB is rapidly becoming, I think it's already become the world's third largest and widely used currency right now after the US dollar and euro. I think China's RMB internationalization initiative is track record is underway. And we're making progress very steadily. I think probably we're getting approaching rapidly to the final stage of a free capital market that will turn RMB into a fully convertible currency that is going to be used globally by many countries.
Well, thank you so much for your insights. That's Professor Jiang Gong from UIBE. Shifting gears to gold prices, gold has seen dramatic swings this year, climbing to $5,000 and $5,500 per ounce before pulling back recently. With global debt mounting and central banks gradually reducing their reliance on U.S. treasuries, could the biggest rally still lie ahead? Our reporter Yu Hongyu sat down with World Gold Council CEO David Tate to get his take. And she began by asking where he sees gold heading for the rest of this year.
I think it was to be expected from having gone up so fast to reach $5,500 and then decline to where they are. The most violent day was when Kevin Walsh was appointed. Apart from that, it's been pretty dull, to be honest, which is a good thing. However, if interest rates in the US or elsewhere go up because we're fearful of inflation and low growth, then I think gold will continue going higher because that will add to the debt burden and the interest on the debt burden and the burden of the burden. And that's why I think gold has been going up all these years anyway.
Markets still expect rate hikes by 2026. How will this impact the Asian market compared to the US?
Many of the Western speculators are exiting the market because they move on to something else and are being influenced by the prospect of higher interest rates. They are very vanilla in the way they do things. Whereas, if you look at the trading, you generally see that the Eastern Bloc, essentially, are continuing to buy gold because they're less driven by the macroeconomics. I personally think wars come and wars go without belittling it or demeaning it or sounding flippant. Mr. Trump's tariffs will come, they'll go. It washes over us in the end. But what won't wash over us is constant rising debts that one day goes pop, because there is not much of an answer to that moment. What do? Do we all sit round a table and forgive each other's debts? I don't think so.
China's central bank continues to buy gold steadily. What does this mean for global currency diversification?
You can move from treasuries into gold as an example. It is de-dollarization in some respects, but it makes sense for them to have other assets through which they can transact. It's almost like it becomes a separate currency.
The EU championed the Gold 24/7 platform to create an infrastructure for digital gold. Why does a 5,000-year-old traditional asset like gold need a digital makeover right now?
Because every other asset is having it in many respects. So I think to keep it relevant and to keep it used in financial markets is very important. One of our flagship initiatives at the moment, which is to create what's called a pooled gold interest, which is extending the London OTC market into a digitalized but allocated gold. Central banks of the world will be able to use fractionalized allocated gold for the very first time. Banks will be able to use it for collateral for the very first time. And so central banks, who would not really like to put their gold onto planes and fly it around the world, will be able to lend it and transact with it amongst other central banks and make an income off it.
An Egyptian billionaire is boosting his investment to over $41 million to transform an ancient Giza plateau into a booming year-round entertainment hub. Now, this multi-million-dollar upgrade is adding eco-friendly electric buses and a massive 15,000-seat open-air arena to host mega concerts and elite sporting events. Yasser Hakim has more.
Egypt's iconic Giza plateau is undergoing a massive transformation, but a growing battle between modern entertainment and heritage preservation is sparking fierce debate. In response, the Egyptian government partnered with business giant Orascom Group to completely overhaul the ancient 3-square-kilometer plateau.
So far, they're doing a great job. There is nothing better than having the pyramids as your backdrop. So it is very interesting and it's very attractive to use this place.
They worked on developing and upgrading the site of the Great Pyramids and the Sphinx, that for decades has been suffering from mismanagement, aggressive vendors, and chaotic organization that dampened the tourist experience.
First, I visit this place because it is very beautiful. Yeah, amazing, great. It is very friendly to me and the environment is very comfortable. I like here.
The area has been transformed to host multiple events aimed at increasing the revenue stream.
Regular corporate, social and sports events take place, as well as huge concerts featuring global stars with a fascinating backdrop of the pyramids, attracting more visitors and endless publicity. However, hosting lavish events on the plateau has caused some controversy.
We criticize the chaotic loud music and lighting. It emits vibrations that affect the monuments. Building the pyramids in a secluded area was intentional to protect the structure for centuries. We shouldn't damage it with such events and fireworks. This is not the place for it.
But others have calmed those fears.
Why not that Egypt uses this area in the most suitable way that does not affect the monument itself? The most important thing, there is rules and regulation, and they have to stay within a certain distance away from the pyramids, and they do hold the events over there.
Meanwhile, there's still room for improvement.
There's a lot that's still needed. We need to have multiple entrances, not just the one to the pyramids. We need to connect the pyramids to the Saqqara and Darshu monuments nearby. We need more buses on different routes, because the buses now have limited roads, therefore preventing the tourists from enjoying the many different attractions inside.
The pyramids can absorb $1 billion or more. Lots of things could be done there. Still there is more, but it's very good that they are investing to enhance and to make it better. It is an experience, as I said, of a lifetime to every single tourist that set foot in this country.
The success of the renovation efforts would help double the number of visitors to the pyramids. It will also support the state's target for tourist arrivals to reach 30 million in 2030, up from 19 million in 2025. Yes, Hakim for CGTN, Cairo.
And that does it for this edition of Global Business on CGTN. I'm Lulu. Thanks for watching. Bye for now.